Good morning, Tasty Nation. It's Thursday. We're back on Forex Focus here on the Tasty Live Network. I'm Glenn. Pete, how we doing?
Good morning, sir. How are you?
Fantastic. Just the best.
Are you? Look at you.
Trying, you know.
Fantastic. 6:30 in the morning, best you
It
can be.
all starts with your attitude.
Your attitude and your ensemble. Look at you. Again, the collared shirt.
Oh, yes. Thank you. My new Peter Millar that, normally is very expensive, but I got it gifted to me by one of my, gentleman companions.
All right. So
that's what you would call a roommate, right?
No, but I guess you could. Sure, that would work. But fair enough. I thought it was maybe Todd was doing you a solid. Todd McCarthy has the ultimate in.
He's got a guy.
He's got a guy.
He's got a Peter guy. He's got a watch guy.
Shoe guy. He's got a guy everywhere.
I wouldn't even say a shoe guy. I'd say it's granular. He's got a loafer guy.
Yeah.
And a sneaker guy. No, he's promised, get me in on his Peter guy, but it has to be a personal introduction.
Of course
and we just haven't, I haven't.
Look at you.
Gone out
it's
to
like, I don't think I've ever seen Frank in a collared shirt. We're going to have to start him small by
once a quarter, because his alpaca sweater, that technically has a collar.
Yeah, but he doesn't like to wear that often. That stays in the vault.
True.
Maybe we start with cut a collar off a shirt and just Velcro it onto his T-shirt just to get him comfortable with the thing. Because the whole button-down thing, I think would it would freak him out.
It's a technology thing. If we introduce him to snap buttons, he could do that.
Maybe we go Western.
Yeah.
Maybe we go Western. I like that.
And as long as it's Lululemon and it's breathable and he can
It's going to be trouble.
Yeah. All right. Cool. Summer shopping spree.
Okay.
End of May here. Gearing up towards June.
Yeah, we are. Friday is the last trading day of May, right? Is that right?
Yes.
Yeah, okay.
Sunday is June 1st,
Perfect.
I believe.
All right. So we're getting some good movement. We're seeing the markets definitely move last night, and I actually thought it was all on NVIDIA earnings because they were down and then they were up. But there was an announcement coming out that, the Court of International something.
Yeah, it turns out it's a U.S. court. We'll get into it. We got a whole slide
Glenn's got a whole
deck.
presentation about that. But just when you least expect it, and
it is funny. You don't miss many things. You're very on top of everything. But I'm glad to hear that you just chalked all this movement up to
I did because I started feverishly. I saw Nasdaq was up 340, and I started feverishly selling them like this isn't going to last.
Yeah.
And then it's like, oh great, now where am I averaging these? Because it's another 40 handles higher.
That's pretty funny. Yeah. No, as a proud shareholder, I think I've got two NVIDIA shares.
There you go.
Treated myself to a nice
well done. Look at you.
Nice dinner last night.
It's not like owning Palantir at 14 cents or wherever Frank bought it, but it's
no, that's trade of a lifetime.
Yes.
That guy. No, I had leftover K-Fire for dinner.
God, how can you?
I actually
that squirrel meat does not age well. You got to eat that within an hour of it being caught in the park.
It was it was much better. Korean chicken we had for lunch.
That's not number one. It's not chicken, so you could just call it Korean meat.
It was Korean meat.
It was,
and just a big helping of white rice that we had for lunch, with some good sides. But for dinner, took that. Made a nice little fried rice out of it, little egg action.
That was probably a good idea because the sides, the little pickled cucumbers and stuff, those are really good.
Yeah, so I think it was better than lunch.
Well done. Look at you.
And then tonight I'll have leftovers from Tuesday.
To make it like a chicken, what do you call that? When you add the egg yolk, you make it like a fried rice.
Yeah.
So the egg's just a binder for all the pieces?
No, I just in the same pan, just kind of scrambled the eggs and then fold it in.
Gotcha.
Incorporate it. And then I was able to give one of my roommates the leftover chicken tinga from Tuesday. So everybody's happy. I'm a provider.
Look at you.
I give and I give and I give.
You're a patriarch.
Yeah.
And you get some squirrel meat, and you get Tuesday's leftover.
For you, Al Pastor.
Very nice.
Yeah. So yeah, that's the excitement going on in my world.
Very good.
Yep.
Very good.
But no, should we do the slides
let's get
first?
into it. Let's go down. Sure.
All right, let's go to the slides first then, because yeah, this is the story we want to get to today. What you could have missed overnight, Wednesday night, was a blocked tariff. The widespread tariffs that has been Trump's favored trade strategy begs the question: will tariffs be blocked indefinitely? And how could this shake out for the U.S. dollar? Because man, there are a ton of ways this could go. As we know already from all of this tariff shakeout, a lot of factors at play. Not really the winners and the losers that you would expect from any of this, but what actually happened. We had a U.S. court, the Court of International Trade. It sounded like, when I first read the headline, it sounded like it wasn't a U.S.
Court. Yes,
it wasn't a U.S.
That's what
court.
I thought too.
But it turns out it was, and their main point of contention was the executive power that Trump invoked to put on all these Liberation Day trades or tariffs on April 4th, the widespread tariffs to many countries, many regions. That was an unjust use of power. I think it goes back to some 1970s act or law that he tried to invoke. They're saying, no, papa, and that they have 10 days to remove these tariffs. And here we have on the right, in blue, is everything that would be struck down by this court order. And the stuff in red, things from his first administration and things prior that went through the correct channels, still in place. So steel, aluminum, solar, a lot of China products. But a lot of these new, the 30% tariffs on China, the 25% on Canada and Mexico, and the 10%
the random, I'm just pulling a number out, and then I'm going to change it and either jack it up if I'm having a bad day or lower it on a good. That supposedly is out of place. But the ability to target a little bit more specifically a sector still remains in place.
Yeah, I think everything...
So why doesn't the pivot become, I'm going to ignore you, and I'm just going to pick the 50 largest goods that probably, if you make the bucket big enough, meet the 7.7 of the 7.9 billion for China and Hong Kong, and implement those.
Yeah, I think it's twofold. I think there is kind of a maximum tariff. I think over 15%. There's some precedent for that being less above board, and then going through the correct channels. Not just saying slapping it on a country ad hoc. So we'll see how this. I'm no legal expert. They'll all settle it. But what we do know is that uncertainty hasn't been good for this U.S. dollar. A lot of things could happen here. The decision could get overturned. The White House has already begun the appeal process. That could make it all the way up to the Supreme Court. Which could be the base case here during this appeal is it looks like no tariffs or that these would be struck down until reapproved. And so maybe you say, regardless of how this appellate process, as long as it takes a long time, we have a reprieve. Is that fair to say? I mean, we saw off this a big jump in the dollar, a big jump in equities. Everything else except the dollar, has that been sustained overnight? Equity moves?
Yes, pretty much. Equities are giving back a little bit now. Bonds unfazed by it, and currencies on both sides. Gold getting bid, silver getting bid. But again, we had appreciable sell-offs at the end of the day. This is, again, from the mechanical standpoint, I don't know how they could impose these tariffs and actually start collecting the money so fast.
That's what I was.
Do these huge container ships go through like a toll booth and they're scanned, and then there's a receipt that comes out, or you have the iPass up there and
I'm thinking it's an iPass. I think
it's just the whole concept of just start collecting all these right away.
Yeah.
I don't get. So let alone who is going to be told down the chain, stop collecting these.
Well, now you really, I think you nailed who the biggest loser of this is anyone that's paid.
That's building an iPass for a cargo ship. Yes, you are now in danger of your play.
And anyone that's paid already. I mean, getting money back from the government.
Good
through
luck.
This. Yeah. Definitely going to take some time. So anyone that was able to.
There's a few people left in government. I doubt that phone call will go answered.
Exactly. A lot of rings. So it'll be interesting to watch for sure. But this dollar reaction, very interesting. We saw a huge lift led by the Japanese yen, the Swiss franc primarily, and then overnight really taking all of that out. As you know, this story isn't exactly settled. What do you make of this just price action in this dollar yen?
Spot on is the fact that the yen and Swiss move means, as much as we say they're not the risk off tools they used to be, they still have a little bit of that in them. And the fact that yen and Swiss were the earlier moves said that the risk piece got baked out a little bit out of it.
But it's interesting it goes from that end because you have that end of traditional risk off currencies, and then you have some risk on currencies, and we didn't necessarily see a bid tone for like a Canadian dollar or an Australian dollar. Is that because
very different movements in Aussie and Kiwi? I think it speaks to that this is just muddled. More confusion.
And also that in recent weeks, as opposed to the beginning of this whole tariff ordeal, we've seen a lot more synchronous dollar moves.
Yes.
And so now I suppose if there's a play in risk on versus off, it's going to be in the risk on in terms of in favor of the U.S. dollar as opposed to, kind of the handcuffs we were putting on the Australian dollar and the Canadian dollar earlier.
Now, I mean, and this move, roughly 6 or 7 o'clock our time in Chicago, the Australians are quoting FX, New Zealanders are, the full suite of people. And again, everybody quotes all around the clock, but the full suite of everybody in Asia is not necessarily into their trading day yet. Thinner part of the market, we get a good 140 pip move in yen. But the takeaway here is, and we're starting to talk about it, these tariff-driven algo moves. Well, if I was short looking for a trade, looking for the 140 trade, this really hurt, came out of nowhere. But it took them a matter of 8 hours to mark it all back out. That's opportunistic for us as traders. So I think what this really speaks to is the tape-driven algos that react to this at thin conditions took this, again, risk off, more certainty. They moved the market quickly. We're not reading that news and trying, we're going to try to jump in and buy some of this. They will put the market to a point, and then forces will interact with it. And you can see that it took a little bit of time, but this was all marked out of it. Those are opportunities that are, I think it speaks to, net, what does this mean? Nothing.
And that, I think, an important takeaway from this story as well could be that that Trump could explore other methods, trying to work his way around, because I can't imagine he's all too pleased with unelected judges blocking his trade strategies. And so if you have that line of thinking of, these actual nothing announcements or uncertain over the long term will continue to spark some expanded ranges over such a short time period, then you're definitely keeping an eye on, his developments, what he publicly says he'll explore next, because you could see a similar reaction there.
Yeah, and I think there's a couple of takeaways longer term here, and we go through the other markets, we'll see. The impact of this is becoming much more muted than it used to be, which means that now we're starting to stick. Yeah, we ran 130 pips. I got to imagine one standard deviation 30 days in. It's probably closer to 82 than was it 100. Let's say 85. It outran that a little bit, but not by much.
Right.
So that actually would have been, if you base it, okay, the market's up 85, 90 points, you would have been a little early selling 145 80s or 90s, and you would have taken a little heat on them, but not much, and the market would have worked for you.
Yeah. And zooming out a little bit, wanted to look at this U.S. dollar Canadian dollar pair because that's fundamentally where your mind goes to in this story. They were kind of the leader. This pair was the lead to watch when all the tariff shakeout began. I mean, we're looking right here at February. That gigantic move was the imposition of tariffs on Canada, the subsequent delay,
Right.
but then you zoom out, and now we're looking at a 4% move in the Canadian dollar's favor year to date. What can we take away from this? That at this point, I can't even say that 10% reprieve for Canada's trade with us. I don't think that would be as impactful as all of our tariffs, all of those on our side getting revoked. I can't imagine that our U.S. growth prospects could be higher, and that bolster the U.S. dollar against the Canadian dollar, because it appears that Canada's been one of the ones to kind of play nicely and have things work out in their favor. If they hadn't, this could be a much different chart. They could have been the China, and who knows if the Canadian dollar and the Canadian economy could have withstood 50%, 30% tariffs. What do we make of this chart and Canada's prospects overall?
I think this was, if we were back at 140, we would have had a much more, 145 or 144, we would have had that raid between March and April.
Gotcha.
We would have had probably a much more reflexive down move.
Right.
But we have kind of normalized now a little bit, and we got the down move, and then, we're back below 140. We're still at the upper end of, I don't know, normal is the right word, but of a longer term range.
Mm-hmm.
So, I think stuff like this becomes less and less impactful. The market put in its high, gave back some ground, settled in on that range, tested another leg lower on the delay, and now we're almost detached from this. What Canada's doing to create other trade relationships, to take the fact that the partnership and the elegance of working closely with a neighbor may not exist. So, like anybody practical other person, they're not going to sit there and wait.
Right.
They're going to look at, okay, this isn't ideal, but where else can we go and do business? So I think this continues to have a diminished effect on the Canadian dollar. I think the idea that the lack of credibility of U.S. policy will continue to weigh on the dollar.
Interesting.
So sterling was the outlier here of, so I'm still 134 bid, and I'll take them all. There's not a lot. I think the bigger picture to get away from the trade noise is, for better or worse, the dollar is not necessarily viewed as
rock steady,
as consistent a proxy for, again, it will still be used as a source of transactional and pricing and everything, but the long-term effects, I think, just speak to the unstable nature of, you and I love tape action. We want movement, especially movement that isn't all one way and
Right.
base ripping. For the most part, the users of FX want a nice, stable marketplace.
Exactly.
This creates difficulty in terms of building, selling, and pricing product because you have so much uncertainty, and that creates difficulty in planning and deploying capital. So I think if the U.S. is a difficult place to do that in, or work with them to deliver your products into, where's a more stable environment?
Agreed. Well, there you have it. A lot of moving parts and uncertainty ahead for this U.S. dollar, but U.S. dollar pairs definitely ones to watch as this tariff storyline continues to unfold, if they'll be blocked indefinitely or if they'll be back on the table in no time. But that'll do it for the slides for us. Let's cut over to the platform as we wrap up here, just to get some real-time price action. Economic calendar. We've got this. Honestly, this might be interesting for me in 39 minutes. We've got GDP estimates. This is the second estimate. Usually, this is quarter over quarter. Usually, it's the first estimate has the biggest shakeout, and then as they finalize that number, it's very clear, and it's less likely that there's a mishit. But things have changed over the past month, maybe more than historically.
The argument
between
is,
these estimates,
right, this should be a more accurate reflection of, again, backward-looking numbers.
Right.
It won't be. It'll be looked at, I think, to see if the fall is more precipitous than what they had forecast. Initial jobs, a bunch of Fed dudes all speaking. Yeah. So not a ton as we go into. I mean, traditionally the end of the month is pretty light. GDP price index, that'll be parsed too. So you're seeing slower growth and higher inflation from that one set of data. If that continues to resonate, for me, what will be interesting to see is bonds are down again today. They had a little bit of a rally earlier in the week, and they're now pressing. We're not pressing 110 yet, but we're getting a little bit closer, lower down. It'll be interesting to see if bonds do press lower towards the end of the week, what that effect on FX is right now.
Yeah, especially with some of those month-end flows that you've spoken of before. Here, checking in on the pound dollar.
There you go.
Here we have this hour candle was the big move on
30 pips.
The huge move of 38 pips here, and all the way back even quicker than dollar yen. But here, kind of settling in. Do you think we'll have expanded ranges today, or I could see both cases where we kind of tighten up ahead of tomorrow's PCE. I think this U.S. Open will still be interesting, though.
Agreed.
Digesting a lot of those overnight moves.
We're at the upper 10th percentile of the range. This really wasn't, impactful in terms of challenging the market. I think it will be interesting to see if honestly, I think if bonds trade lower, that will be the one thing that maybe knocks 134 loose. But if I imagine if it stays quiet, we're going to grind back up into the middle of the range, which is short-term wise, 135, 134 in cable. We grind back up into the mid 135 or plus level. Just on the guys who sold on the tariff news aren't getting paid right now, so they'll get squeezed a little bit. Yeah. But it should be an interesting. We're seeing again, Aussie got beat up, not so bad, but Kiwi got beat up a lot. Came back a little bit, but we're 100, 130 points below where we made it once we finally broke out of 60 cents. I think the ranges are set, which is good because we can go back to our mechanics around math and look to play those one standard and two standard deviation ranges. And the setups here are, again, if you want something cheap, again, Kiwi is relatively cheap. It's in its bottom quartile for the last year, where pounds are in the upper quartile for the last year. So depending on what you want, you're getting very different views of different currency pairs against the dollar. So I think there's a lot of interest here. And let's just jump over euro really quickly before we check out here, because so many of us trade euro. I'd say this is
was not expect. This one is interesting to me because we're hovering around this 113 level. This a pretty good sink off of that 62 pips. Now clawing its way back, but not exactly settled where we were before.
No, but and here for me, just short term, if we can't roll over in the next couple of hours, everybody who sold them or got stopped out on this spike down is probably going to be a buyer towards the day. So we need to, the next couple of hours, resume the trade down to 112.40, 112.45 to continue to weaken a little bit, or again, there were buyers down at 112. That was evident, and we grind back up into the middle of the range. But we'll see. Not a ton of data to drive things, but it'll be interesting to see. Here is one where if you're bullish and you think the range is 112 to 115, and you get a GDP blip down to 112.40, that's giving you a decent entry point, and you know where you're getting out. If we trade back up to 113.5 on this, that's tough because it's kind of in the middle of the range.
Right. But nevertheless, got some data coming out here in 39 minutes.
And there's always something to trade in FX, which is great.
And the U.S. Open shortly after. Should be pairs to watch here in this U.S. dollar story.
All right, let's go get it, my friend.
That's all we got for you today on Thursday edition of Forex Focus. Come back with us tomorrow. But until then, stay tuned for Tom, Tony, and Vanetta up next on Tasty Live.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that